Hello, good afternoon for traders. Welcome back to my channel, Forex Black Box. Another day market analysis for today, 25th of June 2020. At the moment, I'm looking at S&P 500, and you can see that from yesterday we talked about this another leg down, which indeed has been achieved, but we didn't really touch the 3,000 mark here. So we're still possibly pulling back now for another leg down. So that's what I think is going to happen next. Market is bearish momentum, risk off in the play. So if you if you long the stock, be careful here. You should take your profit if you enter here and you exit. That will be great. Wait for the next opportunity. This morning I was shorting around far away from the 20 moving average. It happened here before. I took my profit quickly, but after that it started to show that momentum is really strong. Open with a gap, and I was going through. Sideways here, I didn't trade it until it break out. Another leg down, I exit here and expanded a little bit, come back up. I shorted one more leg here, near the 20 moving average. That's 1 minute trade. If you go to the 5 minute, if you have a big account, you can stay in 5 minute. I like to trade 5 minute as well. I have 5 minute beside the 1 minute. That's what I do with S&P 500 all the time. And I've been long here. Strong momentum, 3 candles, push momentum above 20 moving average. My entry is just above this level, I think, around here, and I exit around here. My take profit is only between 5 to 8 point if the market is showing momentum up or down. So this is a 5 minute. Let's go back to daily. So where we are now is a risk of momentum in the market, and we have this trend line tested many times, broke through, and we'll come back inside it now. So what happened from here? I like to see lower high coming here. So that's what I'm looking for below that 3,000. So what possibly can happen is the following day we'll go broke the 3,000. Probably will come back up here to retest this level 66. Then we come back down again for another push. So I have one, two, another third push, possibly down momentum. That's going to be equal to a measure move. We'll have one here, and the second one is really lagging a little bit. So probably going to have this here, come back, pull back, and probably continue back down for another leg down. Up to this level here, 288 for now, until we see what happens with coronavirus. There's still a lot of room around and some data indicating that the second wave started building up, and we can see it in the market as well since that spike up 3 times, kind of hold that level, and we're coming back down now strong. Let's see any pullback opportunity to short on any pullback, short on rips, whatever they call it. But you just go down the low time frame and you will know where you can short. Is hugging the 20 moving average at the moment. If he's getting away from the 20 moving average up, that's the opportunity to short again. We'll have a push, a second, and if that come low a little bit, that's where you can short around this level, around these highs here, around this high here. So this level is quite important. It's been rejected once, twice. Let's see that it's gonna do it again, and we'll continue down, or we're gonna hold for today here, and maybe we'll go up a little bit. Then we should see momentum down afterward. Okay. Moving on from S&P 500 to gold. Gold is down as well. As you can see that, of course, the dollar is strong, pushing all dollar bears down. A nice bearish momentum going on in gold at the moment. However, the stock, if it goes kaboom down, then expectation is gold will come back up. So you have a trend line here as well. If you see what I'm doing here, 20 moving average, they will come across each other, then probably will come back up again with an indication of risk off momentum. So if I draw this one, the last swing, we'll break above it, we're coming back down now. We're coming back down now to probably retest it with a 20 moving average across, then possibly another push back up. Over one, over two, we're looking for the third one before we have a 3 legs from the breakout. Okay. Bitcoin come back down to the middle of the range, to the bottom of the range. You can see that. That's the range. Let me actually draw that range every time I do it that way. If we take the bottom, the top, There you go. So that's quite interesting range because we have some levels here as well. That's the reason I talk. We have a level here and we rejected here. We'll come back here, reject it twice. We'll come near it, we'll push back up. We'll try to break through. We'll have a failure. Coming back ABC, sideways, and probably will continue back down to have another leg down here. If that's successful breakout, probably come back up and we'll continue back down. The momentum itself is look like up, down. So we're looking for some sideways here, similar to this one, and similar to here as well. See that is just like consolidation for a few days. You can trade that range very much. You just to slice it, slice that you trade, and then come back up. As soon as you know is a range, we have a point here, and come back down. You always know that there is going to be range. We need to break out of this range. We'll break out of it and come back now, and we'll come right in the middle of the range, and see. Let's see where we're going to go from here. Okay. Oil. Oil will sell off very well. We'll come back to 20 moving average as yesterday and today. Yesterday I said that probably going to test the 20 moving average, and we will assess from there. We'll see what happened from here. So we have a two qualifier here. We have a 1-2 breakout, come back retest the trend line plus the 20 moving average. Let's see if it's going to be successful breakout or it's going to be a failure. So possibly oil will want to come back up since it bounced above the 20 moving average. However, we're still really inside bar of the previous day. So we don't really, I can already decide here. If I can go to the low time frame, you see that 4 hours, come back down strong and try to build back up. So that's the daily, that's the day candle we're talking about, the previous day, I believe. And now we pushed back down to it. We broke below it, I think, and we're coming back up. We're far away from the 20 moving average yet on 4 hours. That's indicating that the momentum is still holding down. That could be just only retracement. Coming back here, the low of it, and probably will continue back down for another leg. If that's it, if the pair, if the oil want to come back up, we should see another rejection here, and we will try to break higher. Then we will know that probably we'll try to retest that 20 moving average again and go higher. If it's not, we're going to start to collapse from here. We'll have another leg down. We'll have one push, second push, probably looking for a third push near this trend line. Okay. Guys, if you're new to the channel, please subscribe, like, leave a comment, and thanks for everyone joining my community here, small community for trading every day. Trying to do this update to help people, also to give a quick update every day. I know not much people does that, but yeah, I have some time in my hand, and I prefer to do that way to help others. So what we're looking at here, we're looking at the momentum at the 20 moving average on the daily dollar index. So that dollar index showing some pushback up. The reason being, stock is risk off. If you notice here, we have 1, 2, and 3. Break high a little bit, come back all the way down to where the breakout or the break that candle. See that is building up. So what I expect from here, I expect another pushback up around these levels. Okay, around 99, below the 99. I think that will be the big three. 1, 2, 3. Then 4 probably, and 5, and we'll see what happens from there. But what I know from now, we held the breaking out here. We held it well. We're coming back even more than 50% of this move down, come back up, challenge the 20 moving average, plus the risk of building up, plus dollar is strong across the pairs. Also, you need to check yen and euro. So euro is coming back down here on the daily, euro USD. Touch the 20 moving average is mirror, exact one mirror to the opposite of dollar index. If dollar index is going up, euro is going down. Is a very good opportunity. If you only focus on this trades every single day, every 5 minutes, you will definitely don't need anything else. Definitely. So if you look here, we're getting away from a 20 moving average, consolidate, try to break higher, touch the 20 moving average, rejection, that's your entry. Come back down, you exit there, come near the 20 moving average, and come back down, come back up, you exit. You can enter again here at these levels. In the bigger time frame is retesting. Come back strong. You can hold 15 minutes as well. You can enter 5 minutes and watch the 15 minute how it does. So on the 15 minute here as well, we see that held a little bit here and start to pay 1, major move to around there. Then hold a little bit here as well, break one momentum down, come back up around this resistance here, and come back down now and try to give you one more uh, chance or level just retracement to go back down lower. If that's successful, if they have another wick, like strong momentum up, quick momentum, come to the close and collapse down, something similar to this candle, but a little bit higher, then that will be indication of another momentum down here equal ABC, 1, 2, 3. The last candle normally showing you that the bulls giving up and they exit as soon as the price come near the entry, because normally bulls they enter at the close of the candle. Every candle they enter at the close, they enter on the close, and as soon as they see this candle red, they start reducing their risk and they start exiting some position, come back down here, re-enter again, and as soon as they come break even, they exit altogether and they join the market down momentum. That's every attempt. This momentum is always attempting to try to break higher. So just keep in mind there's always momentum behind every candle. This is not noise, guys. This is attempt to break higher. Attempting as a buyer that trying to buy the market at the dips, and seller that trying to exit their position. As soon as they see a candle coming even to the previous candle, they start to exit their position. As soon as the price come near, the because if I'm a seller, I will normally enter my trade at the closing of this candle. Okay, so what happened is it come back down, come back up. Now I'm not happy about it. So what happened is I will short one more time to break even. As soon as it come near this entry, I will be exiting my position. When I exit my position, I will be counted as a buyer plus the buyers originally they jump in the market, and that's when you see momentum back up again. And this every attempt to break higher, it's the buyers. There's always retracement plus buyers. They come in the market. So in my opinion, I will see your ABC. I'll be exiting here because I have ABC complete. Measure move equal measure move. Okay, very simple. We have a retracement and continuation break at the previous high. You calculate how far it is, how many bips, and how many bips from this level to this level, and that's where most of the trade will be closed. Algos is 85% or more, almost more than 85% trader in the market are computers, guys. Okay, it's a BC trading, algos, machine learning, all the stuff. So that's all when become trading become standardized by the measure move. If you see that the last 15 years, the market's becoming every measure move is equal measure move. That's mean the algos they keep over trading over and over the same pattern over and over and over. For you as a trader, that's why you find pattern in the market. So the almost with time they become even in the way they're trading. All algos across all algos, banks and everybody, and it become standard. You know. So measure move is always, it should be on the top of your head. We have one pushback here, another measure move. You exit and sideways, break below, come back up, rejection. There's so many ways you can trade the market. There's a trillion way you can trade the market, but you need to find the one you're comfortable with and the one that will work with you. It doesn't mean that all the trade ideas will work with you. Some of them will click with you because you did your back testing, you did your studies and everything. So there's more to it, not only candlestick. You should know the pair itself, the currency itself is strong or weak. What is correlation? Why the dollar index is moving? What the reason and all the stuff you put all together, and you make your decision about this. Okay. No one knows why this is coming back down from here, but the only thing you know is looks like the buyer jumping in and the seller they're giving up. See that nice three green candles? Seller giving up, come back up here. As soon as they touch around, they exit the position and they join the crowd. Okay. Some algos they trade that all way down, up, down, up, down. They're very fast, they're very quick. They have tons of money to trade big lot sizes so they can make every 2 pips worth it. So 1 pip, if you trade 1 pip or 2 pips in Forex, it will help you a lot. Even the 1 hour as well is monitored by all algorithmic trading. So this 2 hours showing that rejection. However, as I said that the low time frame showing you retracement coming back and we'll be looking for a major move up. So I think that will come back up here. If I'm correct, if I'm not, probably will continue back down this hour, will close lower. We're about 38 at the bottom of the hour. close to it. So I think that's going to just continue back up here for another leg up. At least the 20 moving average will be tested here. Okay, I talked too much here. That's part of how to trade Forex and any market, guys. All market similar action, price action. So just try to study, learn it, live with it. Every pair you would like to make money out of it, you need to know how it moves, why it moves, and all the stuff, and the history, how many times it moved, and how many pips, the average range, and all the stuff. So many things to it. But try somewhere. Try to understand first why the market moves, for what reason. Is the market all connected? If someone tweet like Trump, why the market moves? Because it's moving the stock, so the stock is going to move the future is going to move the forex and option as well. So all market will move together because if some big measure asset been affected, like S&P 500, the rest of the currencies and stocks will be affected too, because they have a 500 companies inside this one asset. Okay, guys. Pound, same goes here. You see that we have one, two, major move complete. We have a retracement. Let's see if we're gonna have another leg down here. I talked about that yesterday. The 22 or 23 marker will probably will be retested here. The reason being is a very famous pattern, guys. Look at that. One, two, break higher, retracement, and break above through, coming back all the way down to the enter and the exit. Sorry, the breakout level. We'll come back to the breakout level, and from there we'll see some support coming to the market. Probably will come back up again. So that will give me another day, two down here. Then I'm exiting my short, and I'll be looking to long again. That's inside the daily. So probably I'll be going down to the 4 hours. Say, okay, we have one leg down here, one, two. I'm looking for a third one to touch down here. Then from there, we'll be looking for rejection. Normally, is similar to this one, failure, consolidation, hold, break low, come back, and that's what was your trade entry. Okay, you can always code your brain. That's the way. As soon as you see this pattern, okay, guys, look, a holding here. Look that momentum down, rejection, momentum, come back, and we'll break that day. What could happen from here? We're getting away from the 20 moving average, far away from it here, right there. I think we're gonna test the 20 moving average again. It could be your entry in a low time frame, but you're always looking for the bigger time frame where we are, how far we can go. So at the moment, we touch the 20 moving average and we start descending down. Okay, so that's, in my opinion, that's a pullback only. Expanded a little bit here on the 4 hours and coming back down. But on the daily, it does make sense. Okay, why in the daily does make sense? Here you go. Fibonacci 38 or 50 are above it. Well, from the 38, we'll start descending down again. So what we're looking for in the bigger picture, we're looking for possible another major move. If that pull back again, probably going to give you another big major move. So this one will be equal to this one after retracement. So if we come back down here, start to come back up, break this high a little bit, and start to see some rejection, what your expectation is major move equal major move. Okay, guys, moving on quickly. Pound yen as well. Of course, my expectation yen is going to be strong. So this pound yen at the moment probably is going to do sideways here. It's not going to do much. You see that 20 moving average is really not pushing down or up. It's just kind of like sideways, flat. It will become flat soon. So if that does happen like this, we'll be what we're looking for: breakout, successful, or a failure. So the thing is, guys, if we try to go up and we become a failure, then why you think it's become a failure? The reason being because there's a huge selling waiting up there, push the market down, buyer pushed it back one more time up, so they exit their position. So that huge bucket is just full of orders triggered, and the seller, the buyer, they give up as well. So we've got two factors here, and that's why I'm waiting for more momentum down on the S&P 500. If that happened, then probably going to see that start descending down. One, two, probably going to extend a little bit, come back up because this one is going to be equal to this one. Come back up again, double top. Then we will take another leg down equal this leg equal this leg. Okay. Again, Aussie showing just holding here. You see that? We'll hold a little bit here, try to go up, failure, come back out down, and now we hold it here again. So what could happen? I'm looking for a breakout. I'm not in the market yet, waiting for to break out at least this level. And I don't want to see double top. If I see double top, I will exit and I will stand by to try one more time to break higher. But in my opinion, I'm looking for 1,000 pips at this pair plus, because if I get in and out, because I know that if S&P 500 start to risk off, I will be trading it to the upside here, because this pair is always moving very well with the market, regardless of pound weak or strong. Okay, New Zealand as well. We had a nice push in New Zealand. Looks like Salah giving up very quickly here in New Zealand. We push below this level, we break through, become a failure, come back again, retesting the breakout in the low time frame. If you go lower time frame, you see that that's where we break out from. And my expectation is to retest the 20 moving average above a little bit. And if we test that level again, probably we're going to continue all the way up to these gaps. Okay. CAD, pound CAD, here we go. So pound CAD as well shown really lovely momentum here. The reason being is failure to break lower and failure to break high here. The bears bushy all the way down. Looks like they'll become a failure here. Probably is going to be a range bounce. So that could be a range for a few days. Probably going to see something similar to Bitcoin as I showed you before. Your job is to find the right spot to exit and enter. We touched the 20 moving average. What could happen? Retesting the breakout, then probably will continue back up again. Okay, guys, thanks very much for being here. That was a quick video by 21 minutes or 22 minutes. Sorry about that. Guys, if you're new to the channel, please subscribe and like and leave a comment. And I'm working on the course and I'll upload it very, very soon. Just try to structure it properly and try to put the important stuff all together in no more than 5 to 10 minute video each. I don't want to make a big, huge video. It's going to be boring for everybody. Okay, thanks very much, guys. I speak with you later. Take care. Bye.